World, Nicholas Coriano here with Servitude Intelligent Relations. Want to discuss today the reverse stock split. So, for those of you guys that don't know what a reverse stock split is, I have the actual definition here. So, I'll read it off to you guys and then we'll go a little into detail about what to do before and after a reverse stock split from an investor relations standpoint, and how the management should treat it, and when it's a good time to do it and when it's probably not a good time to do it. So, reverse stock split, a pro rata reduction in the number of shares of capital stock of a company that are outstanding. Typically requires approval of the majority of shareholders, often used to increase price per share or to make more authorized shares available in order to complete a reverse merger. So, what is a reverse stock split? Let me put that in layman's terms. You have a stock, you have a million shares out there trading at $1. You do a 2-for-1 reverse stock split. Now you have a 500,000 shares trading at $2. Now, why do you do this? Many times this happens, especially in the micro cap space and the penny stock space, because the stock price has dipped below a certain criteria, either required by the NASDAQ or over-the-counter markets, to be trading on their platform. So in some situations, the criteria, the stock has to trade at over $1. In some situations, the stock has to trade at over a penny. As soon as it goes below this, management starts worrying, rightfully so, because they're about to get kicked off or delisted from that platform, whether it's the NASDAQ or a certain tier of the OTC markets. When this happens, a lot of times management decide to do a reverse stock split to get the price back up. It doesn't affect anything except how many shares are outstanding, obviously, and the price of the stock. Everything else stays the same. Now, what I recommend to many of my clients who are in a situation where they have to do a reverse stock split, first of all, I don't recommend the reverse stock split unless it's absolutely necessary. But when it is and you need to stay on an exchange or a listing platform and you're doing a reverse stock split, what I recommend is a strong investor relations campaign that goes along with this, that explains to not only the potential shareholders but existing shareholders why exactly you guys are doing the reverse stock split and what the reverse stock split means. Too often, management or the financial geeks inside of the company think that everyone understands what a reverse stock split is. And what I've seen, what happens is, let's say you have a stock trading at 50 cents and you do a 4-for-1 reverse stock split. Now the stock is trading at $2. Sometimes the novice investor goes in there into his account, he sees the stock at $2 and he thinks that it went up $1.50. He doesn't realize he has less shares. And what ends up happening after the reverse stock split is they start selling because they think that they made $1.50 profit per stock. And this is not the case, right? Everybody that knows that they made absolutely there's no difference in how much money you have if the stock stays the same price. But what happens is with that selling activity is it creates downward pressure on the stock. And now you have a run rate of that's negative on your stock just because you simply didn't explain to the shareholder, hey, this is what's about to happen. It's not changing your position. It's only changing the number of shares you have. The actual value is staying the same. So I recommend right after a reverse stock split to explain it to the shareholders, understand what they're doing. Even before when you propose it, make sure that they understand why you're doing it, one, so to stay on a certain platform, and make sure that they understand that any downward pressure, so any selling activity can create downward pressure, which would put the company back in the same position depending on how liquid the stock is. And then explain to them exactly what it is that you did. Not every shareholder understands what a reverse stock split is. So if you don't explain this to shareholders, you do run the risk of them not understanding it and looking at the stock as if they had made a gain and potentially selling out of that stock. So that's just my short tip for reverse stock splits. It happens a lot in a lot of these in penny stock micro cap scenarios, especially when you're trying to keep your stock price at a certain level to stay on a certain exchange. And when it is necessary, just make sure you inform the investing public. And this also goes for the investing public that's coming into the stock, right? Because that activity will bring some news and you're going to show up on some feeds based on what changed, what stock splits happened. There's certain feeds that people follow for stock splits, but at the very least, it tells the investors, hey, this is what we're doing, this is why we're doing it, and this is what this means. That way, you create as little impact as you can on your existing shareholder base. So I hope that was helpful. If you guys need help navigating the markets, reverse stock splits, financial consulting at your public company, or a strong investor relations team, we can definitely help at Servitude. Check us out at servitude.com. I have it here on my shirt. I have it on the screen. Share the video if you think it helped anybody. And let me know if you guys have any other topics you guys want to go over in these videos. Hope you guys are rocking. Be great, guys.